Central Bank of Nigeria records $11.6 billion foreign exchange in third quarter of 2019. Federal High Court in Lagos bars 22 banks from accepting MasterCard transactions, just as oil prices extend losses on supply and trade warfares. The program is Business Express, reaching you from the network service of the Nigerian Television Authority. I am Amina Nujaim. Thank you for joining us today. The Central Bank of Nigeria says it recorded a total of $11.69 billion foreign exchange inflow in the third quarter of 2019. This amount shows a decline of 6.7% over what it recorded the previous quarter. It says aggregate foreign exchange inflow into the CBN amounted to $11.69 billion, showing a decline of 6.7% and 9.5% compared with the levels in the second quarter of 2019 and 2018. The development relative to the preceding quarter reflected mainly the fall in non-oil receipts. With the 2019 Companies and Allied Matters Act Amendment Bill passed by the 8th National Assembly and awaiting presidential assent, regulatory issues and compliance has become a topic of discuss at various levels. The bill seeks to establish an efficient means of regulating businesses, minimize the compliance burden of small and medium enterprises, enhance transparency and shareholder engagement, and promote a friendly business climate in Nigeria. The meeting also focused.
Definitely. We hope to achieve better compliance to the Companies and Allied Matters Act, and of course to the issue of corporate governance, the way the company itself is governed, because these are the people who on daily basis see to the workings of the company.
Nigeria has continued to perfect strategies to boost yield and package of organic foods and cash crops for export. Muplang Dakok reports that the Nigerian Export Promotion Council is leading the drive.
Global organic foods and drink exports is said to be worth $97 billion, and the global increase in demand for such foods is prompting Nigeria to cash in and generate at least $200 million revenue from the subsector in the next 3 years.
We want to have our own share of the organic product market. And like I said, we want to assure that within the next 3 years, we achieve at least a minimum of $200 million worth of organic products.
To achieve this, the Nigerian Export Promotion Council has entered into partnerships to develop 7 organic commodities across the country. The aim is to contribute to the federal government's policy of tapping the potentials of the non-oil sector of the economy.
And we're going to take it very serious, working with the Export Promotion Council to make sure the certification is done properly. We meet the standard, we can do it.
And I know that organic, as long as it's certified, would get us premium prices in the international market. And that is the way to go. We need to start to send our products into the international market.
10,000 farmers in each geopolitical zone of the country are slated for training and mentoring. In Abuja, Muplang Dakok.
And the recently released inflation figures by the National Bureau of Statistics, which showed a significant increase. Benny Adams in this report captures a review of those figures.
Data released by the National Bureau of Statistics on Monday shows that month-on-month basis headline index increased by 1.07% in October 2019, 0.03 percentage than the rate recorded in September 2019. Urban inflation rate stood at 12.20% year-on-year in October from 11.78% recorded in September, and 1.15% on month-on-month basis, while the rural inflation rate was recorded at 11.07% in October 2019. The composite food index rose by 14.09% year-on-year in October 2019, compared to 13.51% in September 2019. The rise in the index was caused by increases in the prices of meat, oils and fats, bread and cereals, potatoes, yam and other tubers, fish and vegetables. When compared to September, the food SAP index increased by 1.33% in October, up by 0.03 percentage points from 1.30% recorded in September. The report said the average annual rate of change of the food SAP index for the 12-month period ending October over the previous 12-month average was 13.54%. The core inflation rate, which excludes the prices of volatile agricultural produce, stood at 8.88% in October. This, when compared to October 2018, is slower by minus 0.07 percentage points when compared with 8.94% recorded in September. Also, when compared with the previous month, the core SAP index increased by 0.74% in October. The highest increases were recorded in prices of cleaning, repair and hire of clothing, hospital services, major household appliances, repair of household appliances, glassware, tableware, and household utensils and garments.
The inflation rate of 11.61% in October 2019 rose from 11.24% in September, and that's the highest rate since May of 2018. We have in the studio Henry Etema. He is a consultant, statistician, and economist. A pleasure to have you today.
Thank you for having me.
Now, it's no longer news that the prices of food items are on the increase. Now, what would you attribute as the reasons, and what does it mean for the economy?
Well, official report from the Apex Statistical Organization in Nigeria, which is the National Bureau of Statistics, told us that the price of meat, oil, fats, bread and cereals, potato, yam and tuber, fish and vegetables were responsible for the food inflation. And given the relative weight of food in the basket of the consumer price index is quite significant.
Okay.
Within the neighborhood of 51% or so. So anything that happens to foods has serious impact.
But what caused it?
But what caused it is must be premised on facts and figures, not speculation, not guesswork. When we look at the data in terms of the trend, from 2015, if you track the movement, inflation is defined as continuous change in the general price level, of which you can isolate food and other items in the basket. Then if you look at the general price level, the movement that culminated in this recent increase, from 2015, when the real sector of the economy went into recession, it was single-digit inflation rate. Then as the services sector went into recession by 2016, we started witnessing double-digit inflation. And it has a continuous rise, continuous increase, and until it peaked at around 18 point something percent Then it started when we came out of inflation from recession around 2017. From 2017 February down, we saw moderation in the rate of inflation at the lower level of double digits, 11 point something, and it continued until we started having some fluctuation within the neighborhood of the first period.
Let me come in here a bit. Do you see us going back to this single digit?
Well, what we are saying is that if we look at what is happening in the GDP, there is very heavy relationship. The coefficient of correlation between inflation and the gross domestic product is high.
Okay.
So if you look at the movement of the GDP and that of inflation and the relationship between these two, you can see what I was telling you, the story, how the GDP was going and inflation was behaving.
Okay.
I see us going back to single digits depending on what happens to the monetary policy and also the way the fiscal measures of government are managed.
Okay, before we talk about the monetary policies, the festive periods are just around the corner and there's going to be a lot of buying and selling. Do you see the prices of food items going higher?
You believe me that from December up, there'll be harvest in beans. Some of the cereals will be ready for harvest. Yam harvest will be in full swing. And again, I'm sure by then, government must have eased the issue of restrictions in non-documented inflow of merchandise across our borders and normalizing the coming in of these items. We may think of hitting the single digit, as I said, if the monetary policy authorities manage the pump primers, that is the interest rate and the money supply to the system.
You're talking about the interest rates. Let's go there. The MPC is going to meet next week.
Okay.
And this inflation figures are coming at a time when the external reserves are falling. We also have a situation where what I choose to call the inflation of the minimum wage that is gradually coming in. And the period at which this meeting is going to take place, we are going to have the GDP numbers. Now, with all these put together, what do you see the MPC coming out with in checking these inflation?
Well, the MPC should not be rattled because of this small increase in inflation rate. We are still within the neighborhood of 11 point something, 12 point something. If you look at food, non-food, rural, urban inflation, what the MPC should be looking at is trying to have a synergy with the fiscal policy measures. Remember, the federal government came out with fiscal policy measures that have been implemented in 2019, where you have Annex 1, you have increase in about 177 items, reduction in 100 items, and outright prohibition in about 251 or 2 items. And these are challenges to the productive forces in the system. It is a challenge that government has given the manufacturers, the agriculturists, those who provide services, to leverage on these opportunities and begin to expand production so that when you have more goods and then the demand effect will be managed to the extent that inflation will not go haywire. So it's a matter of one, the monetary policy authorities must work hand in hand with the fiscal policy authorities.
Okay.
And again, our industries and businesses must begin to take advantage of what this government has brought to bear within the business environment. And inflation could be a very good thing in the economy, depending on how you manage it.
Okay, how do you manage it and make inflation good?
If you take advantage, for instance, we have seen the area of food. The money going to the food production, livestock, poultry, crops, fishery, monitoring and evaluation of who gets this money. Is it actually the real farmers? What are they producing? Because the benefit of this closure of borders at this time has taught us a lot of lessons. We now discover that in terms of food security, the question we're asking ourselves, the bulk of meat, fish, oil, cereals we consume in this country are really not majorly our indigenous products, but it's like it's heavy in the product of other countries.
But do you see Nigerians looking inward?
Definitely. The challenge is there now. The chicken has come home to roast. And people know that your internal rate of return on investment in these areas is guaranteed. And given the ECOWAS common external tariff and the movement of goods and services, and again, the Africa Continental Free Trade Area Agreement, which we have signed, all these have opened great opportunities. Nigeria being the largest economy, with one of the largest population within the continent, it should take advantage of the potentials, harness them appropriately, and given enabling environment that this government is creating, launch our capacities to the international market, and not only for Nigeria, but we have the capacity to go beyond the boundaries.
Okay. Now, quickly in closing, do you see them tightening or loosening? 1 minute.
They will neither tighten up much or loosen much, but I see them moderating.
Henry Etama, a consultant, statistician, and economist. Thank you for your insights today.
I'm the project manager for the strategy implementation tax unit of the federal government national strategy for competitiveness in raw materials and products development.
Thank you so much for your insights today.
Thank you very much. Thank you.
Right. Now, the federal government has continued to promote entrepreneurship culture through initiatives that build business confidence, positive attitude, and support new ideas. This is another capacity building for women towards this goal. Bosede Abel reports.
There is a saying that when you educate and empower a woman, you educate a whole nation. Now, over 600 women are here at the Cyprian Ekwensu Center for Arts and Culture in Abuja for a 2-day capacity building and training on business growth and sustainability.
Wow! In fact, exactly what they called it, capacity building training. In fact, for the about 2 minutes I've stayed here, in fact, it seems as if I wasted a lot of time in my business. As I'm going out now, in fact, the next 2 months, I tell you the truth. When you meet me, you will not know me again.
I'm going to achieve many things inside. And so that when I reach my site, I will tell people, say, see, wait till I see that side. I'm so happy.
It will help them in growing their business for the betterment of our country. We will let them know more as how to go about increasing their activities and so that they will be able to generate more or grow more food or do more things that can balance the equation.
This program is geared towards exposing the women to information and upgrading their productivity.
Thank you, Bosede Abel. Now, in midweek trading on Wednesday, the Nigerian Stock Exchange closed in positive territory. Seems like the bulls are around. Now, the NSE share index closed at 26,776.15 basis points, 4,074 deals, and the volume of trade was 267.3 million, valued at 3 billion naira. Market capitalization stood at 12.9 trillion naira. As far as the gainers table in absolute terms, we have NB, Corn Oil and UBA. The losers table had MTN Nigeria, Dangote Cement and NASCON. As for boosting market turnover, Access Bank, UBA and Zenith Bank were the financial institutions that led trade in midweek. And that's it on the Nigerian Stock Exchange. Now, economic watchers say stocks are likely to slide in the coming weeks. Let's take a look.
The latest stock valuation measures in Europe are in the red following the threat of US-China trade negotiations and slump in Germany's real card and falling oil prices. The German DAX dropped 0.99% in daily trading to post a number of 13,086.33 basis points, while the Financial Times Stock Exchange FTSE 100 down by 0.82% and the CAC 40 was also down by 0.7%. US stocks were mixed on Wednesday morning as the Nasdaq dropped by 0.24%. Futures on the S&P 500 declined by 0.06% during the trading session, closing to a slightly lower open, while the Dow Jones Industrial Average was also lower by 0.24%. Stocks in Asia retreated on Wednesday after Japan reported its worst monthly decline in exports in 3 years. Japan's Nikkei index declined by 0.62% to 23,148.57. The Hong Kong Hang Index also dropped by 0.75%. Back home in Africa, the equities market were mostly bearish. South Africa's JSE Africa Top 40, Namibia's overall index, Ghana's GSA Composite in Nairobi's all share declined, and on the flip side, Tunisia's dividends appreciated by 0.12%.
Now we take a look at the commodity market, where oil prices slipped for a third day on Wednesday as a surge in U.S. stocks reinforced concerns. How are other commodities faring in the domestic and local markets? We take a look. Now, how is the Naira trading among other international currencies? We take a look. That brings us to the end of this edition of Business Express. Don't forget you can access all previous episodes on YouTube, and you can also communicate with us on Twitter, and the handle is @NTA News. Now don't forget the hashtag BizExp. We value your feedback, so keep the mails coming. Join us again on Friday for another package. I am Amina Nujay.